Welcome to the Daily Business and Finance Show. Elon Musk's green transition insights, Nvidia's 2024 expectations, and Sycamore Partners' potential Macy's bid. How B of A, Citigroup, and Wells Fargo survived the banking turmoil of 2023 and their outlook for lower rates in 2024. The high demand and valuation of Palo Alto Networks and cybersecurity for 2024. Upcoming earnings week, Nike, FedEx, BlackBerry, Micron, and Carnival, among others. Illumina's divestment plans for Grail following U.S. appeals court decision. BTIG's top medtech stock picks for a stabilizing sector in 2024. Stay tuned after this short ad break to delve deeper into these headlines. Elon Musk, the chief executive officer of Tesla, while addressing an event in Rome, advocated for a slow and steady transition towards renewable energy. He emphasized that this shift should not involve vilifying the oil and gas industries. Additionally, Musk voiced his worries about Italy's falling birth rate affecting potential investments in the country. He proposed that instead of depending on immigration to bolster their workforce, the Italian government should provide incentives for having children.
The year 2022 proved to be challenging for Nvidia. However, its shares have made a remarkable recovery in 2023, skyrocketing by more than 200%. Even though there are worries regarding the semiconductor behemoth's valuation and expansion, market analysts continue to hold a positive outlook towards its future. The latest earnings report of the company surpassed predictions, recording $4.20 per share on a revenue of $181.2 billion. This significant increase is primarily attributed to the surge in artificial intelligence.
Reports suggest that Sycamore Partners, a private equity firm, is contemplating making a bid for the department store Macy's. This comes in the wake of a 20% increase in Macy's shares following an offer of $5.8 billion from Arkhouse Management and Brigade Capital Management. Despite this, Paul Lejuez, an analyst at Citi, has downgraded Macy's stock to sell. He expressed doubts regarding the success of any potential takeover offer.
Major banks in the United States, although they have managed the recent banking instability better than their regional counterparts, have been affected by rising interest rates and a decrease in investment activities. This has resulted in their stocks lagging behind the S&P 500 surge of 23%. Citigroup is currently undergoing restructuring, while Wells Fargo is under regulatory examination due to previous scandals. On another note, Bank of America is venturing into new markets despite making some staff reductions. It's anticipated that future discussions with regulators will occur as potential regulations could raise capital requirements for these financial institutions.
In the realm of cybersecurity, Palo Alto Networks has witnessed a significant surge in stock value, with an increase of 117% in the year 2023. This impressive growth positions it as the second-best performer within its industry peers. While there are some concerns regarding overvaluation, the majority of analysts maintain a positive outlook due to the high demand for cybersecurity services. Nevertheless, there is a potential risk associated with growth deceleration as saturation looms over the company's customer base. Despite these challenges, Palo Alto Networks' most recent earnings report surpassed expectations, and forecasts for future performance remain strong even after minor adjustments.
In the coming week, it is anticipated that Wall Street will receive earnings reports from several major corporations. These include Nike, General Mills, CarMax, and Carnival Corporation. Additionally, noteworthy announcements are projected from Accenture, BlackBerry, FedEx, and Micron Technology. One of the highlights to look out for is HEICO's forecasted revenue growth of 48% for the fourth quarter. FedEx also has an expected annual earnings growth rate exceeding 15%. In other news, Micron Technology has adjusted its first quarter earnings outlook in an upward direction due to better supply-demand dynamics.
Illumina has intentions to divest its cancer testing division, Grail. This decision comes in the wake of a ruling by the U.S. Fifth Circuit Court of Appeal, which labeled their agreement as anti-competitive. The method of divestiture could either be through a sale or a capital markets transaction and is anticipated to be concluded by the end of Q2. This action is in response to directives issued earlier this year by both the Federal Trade Commission and European Commission.
Financial services firm BTIG forecasts a steady year for the medical technology industry in 2024, overcoming previous worries regarding GLP-1 weight loss medications and increased interest rates. The company projects enhancements in profit and loss statements, supply chain operations, with a reduced impact from inflation. Additionally, it foresees advantages stemming from the election cycle. Top recommendations encompass Abbott Laboratories, Glaukos, Zimmer Biomet, iRhythm Technologies, and RxSight.
And that's a wrap on the Daily Business and Finance Show. Remember, the market waits for no one. Stay informed, stay ahead. Until next time, goodbye. I'm Montgomery Jones.
And I'm Amalia Dupre. Until tomorrow, farewell.
This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. This podcast provides information only and should not be construed as financial or business advice. Check out our other podcasts in our network at classicstudios.com.